Hello, ladies and gentlemen. Welcome to the very first episode of PGIM India Mutual Funds presents LiveMint, Amend, Adjust and Adapt. This is a series of high-powered virtual panel discussions where we're really taking a look at what it means to be successful in the post-COVID world. I'm Vikram Chandra, founder of Editor G Technologies, and today we're going to be looking a bit at the economy and at the markets. And we've got a really high-powered panel to help us in doing this. I'm about to be joined by Sanjeev Sanyal, who's the Principal Economic Advisor of the Government of India, and I'm going to be asking him about the measures the government already has taken and the measures that are hopefully around the corner. And we've got a phenomenal panel. Usha Thorat is joining us, former Deputy Governor of the Reserve Bank of India, Mr. UK Sinha, former Chairman of SEBI, Mr. Pranab Sen, who was the former Chief Statistician of India, and Mr. Glenn Baptist, the CEO of PGIM Global Partners. So, Mr. Sanjeev Sanyal first, the Chief Economic Advisor of the Government of India. You, of course, one of the most esteemed Indian economists. You're also the Principal Economic Advisor to the Ministry of Finance. So therefore, the person pretty much either running the Indian economy or helping in keeping the Indian economy going. So just wanted to understand, first of all, how are things actually shaping up here? We've obviously seen a black swan event and, an unprecedented disruption. What you're hearing, are things bouncing back? Are things looking better, not looking better?
So obviously, as you know, Vikram, the economy globally has gone through a huge shock. And here in India, we are no exception. When you lock down the economy in this sort of way, it obviously has a huge impact. I mean, we are deliberately suppressing demand and economic activity. So there is an impact. And of course, there is also the impact of what's happening internationally to our exports and so on. I think the really interesting thing is, how do you, in these circumstances, make decisions? Because you're dealing with huge amount of uncertainty. There's uncertainty about how long this will last. There is a lot of uncertainty about the post-COVID world. It's not like we're just going and reinflating the pre-COVID world into this. The geopolitics will be different. The supply chains will be different. Consumer behavior will be different. So the really interesting thing is, how do you real time make decisions in this circumstance of extreme uncertainty? And I think that has been the tricky part, because there is no formula. Basically what you do is you do a cushion for the worst. Now that is how far we have done so far. Now as we open things up, we will go into the rebuild phase. And that is the phase in which you will now begin to see a somewhat different set of measures. That's why we are doing these outreaches with people like yourself to get the message out. Tell us if for whatever reason this is not going through the way you would like it. Tell us, we will fix it along the way.
All right, Sanjeev Sanyal, pleasure talking to you. Thank you so much for joining us. Usha Thorat, can I just start with you first? But, the monetary room which is available right now, which there's a lot of monetary space, there's fiscal space, but there's monetary space. And yes, you can leave it to the banks to push it forward. What is your take on that?
Obviously, it has two strands of it. A huge part of it really depends on the liquidity injection and the credit guarantees to start working. Because if that's the way that the demand revival is going to happen, and also for the sake of holding on operations of existing activity. But in all this, we are assuming that the supply constraints will actually get eased, because for the banks and for the businesses, it's really the fact that you've got to get your labor back, you've got to get your supply chain working, and you've got to get your businesses working with the lockdown happening and with the changes in the lockdown rules, almost on a dynamic basis. So the kind of environment in which businesses are today working is, they really needed some breathing time to really just hold and go on operations without actually having any economic activity, which is really a very, for the banks, this is extremely uncertain. It's extremely risky, because then they are providing more working capital funds to a unit which one doesn't even know is going to get revived or not. And that is why I think the moratorium sort of route actually works better.
Let me get Mr. Sinha now. Mr. Sinha, what's your take, sir, on the present situation, what Mr. Sanyal said, and your own prescriptions?
Coming specifically to the markets, in India, for example, in the first quarter ending March, our market between January and end of March declined by about 35%. But in April to June, in the previous 3 months, ending yesterday, 30th of June, our market has gained 25% from that level on 1st of April. Look at the foreign portfolio investors. Both on the debt and the equity side, we had a huge outflow in the first 3 months, but that has also now become positive. In fact, about $4 billion, I was looking at the figures still yesterday, $4 billion positive inflow in the last 3 months. So there is a realization, not only in India, but globally, that the financial markets have become completely disconnected with the economic reality.
Pranab Sen, if I could just come to you and let's just look at the data. So when you're looking at what is actually happening in the economy, what's your sense? I mean, we've heard it's a demand problem, no, it's a supply problem, no, it's a bit of both. How bad is the situation out there?
Let me outline the nature of the problem that we are coming up. We've had a 2 month plus supply shock. We've lost about 20% of GDP during this period, maybe higher. What's going to happen post-lockdown is we'll transition from a supply constraint to a demand constraint. If the government does not kick in with a demand stimulus at that point in time, which is this point in time, in terms of simply timing, the lockdown is substantially lifted. So the government needs to come in now. Otherwise, what will happen is that as firms try to come back into production, they're going to face a demand problem.
Glenn Baptist, if I could just get you in on that note, should people worry? Is there a crash coming?
Take a look at the markets. It's frankly very tough at this point in time to know what the markets are factoring in. We think it will take time for the virus to be contained and, importantly, for economic behavior and activity to adjust and get back on track. So in other words, we are not expecting a sharp V-shaped recovery, but rather, frankly, it's more like a Nike swoosh recovery, a sharp decline with a slower, longer recovery that will probably take till late 21 or maybe even early 22 before we get back to levels before the crisis.